What's up, everybody? Today I'm gonna answer a question I get all the time. If I gave you $1,000 to invest right now, how exactly would you put it to work? So here's my $1,000 breakdown. 40% into an S&P 500 ETF. This gives you instant ownership of America's top 500 companies. Now, over the last 120 years, this has returned about 8 to 10% per year. That might not sound like much. 30% into a technology ETF. Now technology continues to drive growth in the US economy, so having exposure here can help boost your returns. 20% into a dividend ETF. Now this not only grows your money, but also pays you passive income through dividends. These are essentially like free shares of stock you receive as a reward for being an investor. And since they're usually from stable companies, they're perfect for keeping your portfolio stable during downturns. And finally, 10% of your money, so $100, is kept as emergency cash. Now, when it comes to investing, there's one golden rule. Never invest money you might need tomorrow. Having a small cash cushion can help avoid panic selling in tough times. There you have it. A simple and balanced approach to investing your first $1,000. And it's important to note that this is just a starting point. As you gain experience and confidence, you can adjust your strategy based on your financial goals and risk tolerance. Now that you know my investment strategy, let me share 3 beginner mistakes to avoid. Mistake 1. Chasing hot stocks. When it comes to investing, avoid the temptation to chase the latest trends or invest in individual stocks without proper research. Remember, investing should be a long-term strategy, not a get-rich-quick scheme. Take your time, do your homework, and focus on building a diversified portfolio that aligns with your financial goals. Mistake 2. Investing money you can't afford to lose. Now, I cannot emphasize enough the importance of financial security. Before investing any money, make sure you have a solid financial foundation. That means having enough savings to cover your essential expenses and an emergency fund in place. Don't jeopardize your financial stability. Prioritize your needs and invest wisely within your means. Mistake 3. Checking your portfolio every day. When you invest in the stock market, it's crucial to adopt a long-term perspective. The market fluctuates daily, but wealth creation is a long-term process. Avoid the urge to check your portfolio constantly. Trust your investment strategy and be patient. By doing so, you can avoid making impulsive decisions based on short-term market volatility. The key to success in investing lies in consistency and patience. Now, after you've invested your first $1,000, the real game begins, which is consistently adding small amounts every month. Even if it's just $50 or $100, the power of compounding can work its magic over time. Think of it like a snowball rolling down a hill. It starts small, but as it rolls, it gathers more snow, becoming bigger and more powerful. Similarly, your investments will grow exponentially as you continue to add to them over the years. Now, if you found this video helpful, hit that like button so more beginners can discover this simple investing guide. Subscribe for weekly videos that break down the complexities of the stock market into easy-to-understand steps. And don't forget to drop a comment below. Where would you put your first $1,000 in 2025? I'd love to read your thoughts. Remember, investing is a journey, not a destination. Start small, stay consistent, and you'll be amazed at what your future self will thank you for today.